What's going on, guys? Welcome to Trading in the Trenches. Welcome to Trenches Trading. We made a name change. Might take me a while to get that down. Okay, let's go over my top picks for this week. So first, I'm gonna look at some news. Forexfactory.com. This is where I get my news. U.S. government data may be impacted by the shutdown. Tentative events are subject to delay, revision, or cancellation. Excellent. So the government is shut down here in the United States. And like this headline says, it has not stopped the stock market. This is true for every occurrence of the last, I think it's been like 22 government shutdowns or something like that. Let me see, I have it here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. This is the 21st one, I believe. So 21 government shutdowns going back to 1976 all the way up until currently 2025. Interesting to note, a majority of them, a good portion of them, have all began on the same date, September 30th. Longest one being 35 days. That was in 2018 to 2019. And the shortest one being a day, back in 86, back in 82, and 87. So some interesting history for you all. There's not much going on. It's not like the markets usually tank or soar. It's the data shows that the likelihood of something happening is, or something big happening, is not likely at all. I was studying this last week before this actually happened, so that I could just be aware, moving forward. And essentially, my results told me that there's nothing for me to be concerned about. Even moving forward, if there's any government shutdowns, I'm going to continue to trade as per regular. All right, so Wednesday, we got a red folder for Wednesday, 2 p.m. FOMC meeting. Thursday, we got unemployment claims coming out, and Powell's supposed to speak at 8:30 in the morning. So this is interesting, right? I wonder if he's going to cut rates like he said he would last month, or if with the government shutdown, we get some sort of surprising news. Not gonna lie, I'm hoping that he says something to shake the markets up. The markets have been booming, and I'm ready for a pullback, so that we can set up for this end of year holiday season rally. If we just keep pushing higher and higher, it's hard for me to just throw my money in unapologetically and allow the markets to do their thing, just because I'm used to a bigger pullback in September. We've had a little dip, but nothing crazy. All right, and here Friday, we got a lot of red folders. We got the average hourly earnings, non-farm employment change, we got the employment rate, consumer sentiment, inflation expectations. So we got a lot of things Friday, Thursday, and Wednesday. So the first 2 days of the week should be excellent for trading. Alrighty. So let's just look at the market structure, since I was just talking about that. Here's my watch list over here on the side. So this is the stock market, specifically the SPX. And since April, right, the lows in April, what was this? April 7th. The market has shot up almost 40%. All right, this thing has been booming. This is the SPX. And, besides this little dip here, September 2nd to the 34 EMA, price has just been up since that drop early in September to the last day of September. The stock market's up 5%. So we had that small drop September 2nd, and we had this little drop from the 3 ATR down to the 21, September 25th. And besides those two drops, which look highly symmetrical, let's find out. So this was the first drop, and this was the second drop. Well, it wasn't symmetrical. It was a little bit smaller, but still. Besides those two drops that lasted, what, 3 days, 3 day pullback, and then the market just kept on pushing. So this is interesting. Let's look at this overall picture. So this is the Fibonacci retracement on the weekly swing, the weekly pattern. All right, we hit our first target, 65.04 and 40 cents, and our second target is up here, 69.58, 49 cents. So it'll be interesting to see this thing either hit this or break over 7,000 into the end of the year. So that's the SPX. Let's look at the Qs. The Qs are doing something similar. They broke through their first target, 578.46. Next target, 626.35. We're already in the 600s, so the Qs are just a little bit away. Let's see. Only about 4% from hitting their second target. The next one is going to be the Russell. The Russell has not hit its first target yet on the weekly, okay? So first target is 264. We're about 10%, it looks like. Let's see. 6, 7, 8%. 8%, $20 on the Russell. And the Dow Jones is a little bit closer than the Russell, but also has not met its first target yet. And that's about 1% away. So this could happen Monday into Tuesday. What's this? PCE delivers Goldilocks numbers for the stock market. That's from September 26th. So the Dow Jones has not hit its first target, but it's very, very close. The Russell has not hit its first target, and it's got a ways to go. The SPY, or the SPX, is working on its second target, and the Qs are working on their second target. Alrighty, so that's what's happening in the market. Let's go over this watch list. APP. So APP on the weekly has been a monster. Let's see the monthly. So this monthly, last month, almost came up near the 5 ATR. It's extremely extended. This stock is pushing the limit here. Let's see what this. So it hit the second target. Look at that. Second Fibonacci target last month. That's beautiful. And then on the weekly again, it's already up here by 5 ATR, and on the daily, it's finally come down for a little bit of a pullback, resting on the 8 EMA, 8 exponential moving average. So this one's decent. The monthly and the weekly, the bigger time frames are extended. I'm not a huge fan of that. Let's see if I can find a setup here. If I don't see anything on this chart, I'm just going to move on. Nope. All right, well, APP is extended. I'm going to cut that off my list. Cocoa. Never heard of this stock. I've never heard of this stock. The Vita Cocoa Company. Oh, that's right. When I added it to my watch list, I remember seeing that. I love coconut water. This is awesome. When did they go public? Oh, 2021. This was a beautiful, beautiful move. From their opening price, they're up 177%. That's awesome. Vita Cocoa. So the monthly chart here looks good. It's got some space between where price is currently and 3 ATR. We got some squeezes. I love that. Ooh, this weekly chart is interesting, right? Price is a little bit closer to a nice entry. I don't know if we're gonna get it. Seems like this previous resistance point here is now support over here. So this might be the first week that this becomes support, which would have a new pattern probably start to build up here. Oh, and they have earnings November 6th. So this could be interesting as a play to exit or to enter for move into November. Let's see. This is the daily chart. Daily chart again, squeezing. I love that. They got some news. What's this? CEO Martin Roper sells 40,000 shares. Yeah, I bet he does. He's up 177% from inception, or from when they went public. And he's got earnings coming up, so he probably wanted to capitalize on some of those gains. I like that price is up here, beating this resistance point, looking for a push higher. Like we got our squeezes. Price is a little bit far from ideal entry for me. Let's see what it looks like on a lower time frame. Oh, this is it. This is the one. Look at that. So price is on the point of control, right? There's this area. Well, it's the point of control for this pattern for these people, right? When I took more data, it changed what I was looking at there. But up here, this is where the volume is happening. This is the action at this upper portion. Price is not too far from 21 EMA, so this is definitely an area I'd like to get involved, right? Between 41.93, 42.36. This is the dark blue label here, light blue label that's coinciding with these two moving averages. And price is currently at 42.82, so not bad at all. Cocoa, let's see what these options look like. Not the best. What about the November series? These 50s aren't horrible. I'd play these 50s. All right, it's a 20-cent spread. I'd try to get these at less than $1, under $1. Not bad, not bad. Definitely under $1. Where's my box? Here we go. In this zone here, that'd be my buy zone. Pick up those 50 calls for under $1. All right, FTAI. This thing has been, just look at all these green candles. This thing has had a phenomenal, what is that? January 2023 to November 2024. Amazing 2 years right there. Pulled back for a few months. Now it's pumping up. What is the next target here on this monthly? $208. All right. They have earnings. Oh, they have earnings Monday, October 27th. The weekly, the daily. Oh, look at that. We got our first squeeze here on the daily, and price is right above the buy zone. So this is interesting. They got on the 27th. Let's check them out. FTAI. October 27th. So we'll look at these October 31st series. These are kind of spready. Look at that. $4 spread, $2 spread, $3 spread, $3, $2 spread. Yeah, I don't like that. FTAI, these contracts are not what I would call ideal. Maybe something closer. Nope. Well, those contracts are just not for me. I don't like the spreads, so I'd be cutting that. Coco had that one contract that I would buy, but it was about $10 out the money, so I'm gonna take Coco off my watch list too. Google. Oh, looks like I already have a setup here on Google. Huh. Interesting. I don't know if this is from last week or what, but let's get that off. Alrighty, so we got A monthly squeeze, which is just firing this month. That's interesting. We got a weekly squeeze that's been firing since July, and a daily squeeze that's setting up here. Hey, baby. My son just woke up, ladies and gentlemen, so you'll have to pardon me for a second. I'll see if I can edit this part of the video out. Come on, let's get you some juice, buddy. How was your nap? All right. Let me get you some juice. You okay? You're okay. Come on, you can sit with me while I show the people my weekly plan. Okay, this is Google. So Google's got a squeeze forming on the daily. We got this beautiful pattern that I love to trade so much. Right, essentially, price has gone up and has formed this little bullish flag. Okay, that's my favorite pattern to trade. We've got earnings coming up October 28th, and I would love to pick Google up on a dip between 233 and 241. All right, let's put that here. 233, 241. This is my ideal buy zone. Okay, I would stop out under 233, essentially where this support breaks. All right. See, it was resistance here, then it became support. So if Google loses that support right at the 34 EMA, then that's where I would cut it. And I'd like to either target a new all-time high right up here at 256, or let's see, right up there, 256. Or I'd like to see if it can break up and target these Fibonacci levels, 260, 266 plus. All right, got a lot of resistance over here at 250. 250, right, psychological level as well, nice round number. So we got 250, 260. These will make some good targets. And the old all-time high is at 256. Their earnings date is the 28th. So I'd love to get these contracts on the 31st. That way I can take advantage of the implied volatility, right? So 40%, 36, 38, 44, 42, 39, 40, right? The earnings series tends to have the higher volatility, implied volatility. Now, these spreads I like, right? 30-cent spread for the 260s. We got another 30-cent spread for 255s. And about 45-cent spread for the 250s. Because it's the earnings series, I like these 260 calls right here. So these 260s, I'm going to add them to my watch list here. And in terms of price, oh man, I hope the microphone didn't pick that up. In terms of price, if Google can get below 241 into this buy zone, then I think these will drop under $5. And I'm happy to pick this up at $5 or better. So that is the 1031 260. All right. So for Google, I want to get the 1031 260 calls at $5 or less. All right. I'll stop out under 233 and take profits at 250, 255, no, not 255, 256. This would be the previous all-time high. Oops. All right. Or the fib level 260 plus. So that's the trade plan for Google. All right. This is the entry. Let me just write that so it's not confusing. I'll put buy zone. So we got our buy zone, 233 to 241. These are the contracts I would buy. That's my stop loss. This might take profits. That's the trade plan for Google. Microsoft. Ooh, that's a nice pattern. Let's see the weekly. Look at this. Thing's been running since April as well. Let's see the monthly. Okay, it's got some space between what price is and 3 ATR. Monthly, weekly, and the daily is squeezing, so I like that. When's their earnings? October 28th. Oh, that's going to be a busy week. We got Google and Microsoft. Let's see what the Microsoft contracts are looking like for this week. So these contracts are a bit more expensive. But again, since it's the earnings series, I'm happy to go out of the money. What's this previous all-time high? 555. It's like the old Domino's deal. I might be dating myself with that, right? So we got the 555, so I'm happy to get the 555s. Let's go out here. Look at that. These 555s are 340 a pop. I like that. So we got 1031 555s. What are the 50s like? The 550s aren't bad either. If you want to go a little bit more in the money, they also have more open interest. So, the bid-ask spread is a little bit tighter. And, prices right in the buy zone almost. So prices up here at 516. My ideal entry would be down here between 512 and 507. All right. 507 to 512. Same thing, take profit. I want to target this 535 area first and then new all-time highs. So take profits. We're going to say 535 and 555 previous all-time highs. I think my son just fell out again on top of me, so if you guys hear any Any breathing that sounds like snoring. Well, that's him. And then the 34 EMA is right here at 510.60. So I would stop out of this under 510. All right. I like to use the 34 EMA as my stop loss. If you guys can tell by now. All right. So ideally, this would look something like getting in around 511, stopping out under 510, and running this thing up to 535 plus. Gives you amazing risk reward ratio, right? This is why I like to enter in between these moving averages and basically cut my losses underneath them. And if you see, right, this is basically the range for this area down here. So once price is here, I don't want to be involved. And then from here to here is this range. Okay. So ideally, price comes right down to this area and then bounces really quickly and gets back up in this area for a push to new all-time highs, right in time for earnings, which is 10:28. So this is about 25 days away. New all-time highs is a 7% move. All right. And Microsoft, let's see, on the daily, runs $7.64. So Microsoft does $7, has a $7 ATR, which means it moves about $7 a day. All right. This means it would take about 6 days of consistent movement higher for Microsoft to hit $38. And it has 25 days. So it has approximately 4 times the amount of time that it needs to get back to make all-time highs. Obviously, that's just going off its average true range. This thing made new all-time highs, a $46 move in 1 day. So anything is possible for sure. But my point is that this thing has time, and that this trade plan makes sense for me. All right. I want to buy a contract that's kind of out of the money, giving me a strike from either the old previous or just slightly below it, 550 or 555 calls. I'm giving myself 25 days time, 26 days, but tomorrow's Monday, so it'll be 25 days. Okay. This thing can get there, right? It's only a 7% move. So it can get to new all-time highs. It has an amazing asymmetrical risk-reward ratio, right? If it gets to all-time highs, that means I was risking $1 to make $38. If you've been trading for some time, you know most people go for like a 1-to-2 risk-reward ratio, 1-to-3, 1-to-5. This one's a 1-to-38, all right? I'm very happy to take this trade, these odds, any day of the week. All right, that's Microsoft. Let's look at NEM or NEM, Newmont Corporation. This might be a gold stock. And it looks like they just made new all-time highs this month. Let's see. Yep. Last month they made new all-time highs. So maybe this month they carry on. And this thing is just soaring, right? Let's see the daily. They have earnings also, 10:23. They don't have any squeezes. Let's see. Oh, here we go. I can get behind this. Price has to come down a bit, but I like the idea. So an entry from 81.67 to about 84.30. All right. Buy zone 81.67, 84.35. All right. I'd stop out under 81. If you want to use the psychological number, you could stop out under 80. All right, this was essentially previous resistance, and then price is now above it, so it has become support. And then you could either target 3 ATR over here around 90 bucks, 5 ATR around 92, or the Fibonacci levels, which are my preferred targets. All right. So say we get in the middle of the buy zone, stop out under 81, and we get our first target. Risking 1 to make 277. That's a more common risk reward ratio, right? Again, I'm happy to take this trade. I'm happy to take this risk on. Second target is 1 to 358. Third target, right, gets better and better. First target for me would be here, near previous resistance. So right about 87 bucks, risking 1 to make 167. I would buy multiple contracts, of course, and scale out as I make profits. Emptying my first portion around previous resistance, and then seeing how far up this thing can run. NEM, let's see what these contracts are worth. Oh, they have earnings, right? Oh, was that the 23rd? Let's see it on the daily. Yeah, the 23rd, beautiful. So these are the ones I want to, this is the series I want to look at, 1024. So like these 87 calls, right at the money, 15-cent spread, beautiful. If you want to go a little out the money, get the 90 calls, it's about $1 less in premium, paid about $2.30. Where the price is now to where I want to actually get in, right? These things will drop and they'll be under $2 for sure. They might get in at like 180, $1.80 or so. On the pullback here to 82, 83. Maybe the 85s will make more sense then. They're about 470 now, but on that pullback, they might be at 350 or 375 or so. So something to consider. That's NEM. Nvidia, the darling of the stock market currently. So this thing is a monster. Truly, freakishly strong. The daily just fired long, so there's not much to do with this on the daily, and I doubt there'll be anything on these lower time frames. So there's a setup here, starting to form on the 78. Where was it on the daily? Okay, so this is a playable pattern. I'd play this. I'd want to get in ideally. Something like that. About 184 to 187-ish. It was like 186.80. That'd be my buy zone. And then I'd just target these previous highs. Previous all-time high at 191. Stop out under 185 here. So If you're new to the channel, this may not make sense. I mean, even if you've been following me, this still may not make sense, right? How can my buy zone be lower than my stop loss? Well, ideally, I want to see a candle like this, where price comes down, buyers enter, and then it comes right back up, right? Or something like this. Price comes down, buyers step in, price never gets back down to this level and takes off. Okay? So the buy zone can be underneath the stop loss. The way I use my stop losses, some people use dips into their stop losses, right? So right here, if the stop loss was at 174, when this went down to 173, many people would stop out because their stop loss was violated, right, by this wick. The way I use my stop loss is I want to see the price close beneath my stop loss. So I don't use wicks as a stop loss. So this is about 174. So this would wick out many traders from their trades. But for me, because this closed all the way up here at 178, I would have not stopped out here. I would have stayed in, would have came down and bounced again, and then I would have took profits nice and high up here. New all-time highs, right? So I can enter a position at 184, but if it closes beneath 185, then I will exit. Hope that makes sense. All right, 78-minute chart. Let's see NVIDIA options. 78 minutes. So I can do this monthly series, October 17th. These 190s are fine right here at the money. However, if you are new to trading options, then I would recommend you giving yourself more time. Maybe October 24th. The 190s or the 195s, right? They're a little bit less, $2 less. $5 more out the money, but $2 less in premium. I think those are fine because we're targeting up here. Old all-time highs at 191, so we'll be close enough to 195 that those things will move. The reason why I suggest you get more time if you're newer to trading options is because the price or the premium in the option is going to fluctuate a lot. You're going to see big dips when it comes to the pricing, especially with only 12 days left. And only someone who's been trading for a while will be able to stomach that, right? If you pay $4 for the contract and it drops $2, you might want to exit the position for a loss. However, if the chart is still intact, someone who's seasoned is going to just basically trade their chart and not their P&L. And most new traders trade their P&L and not the chart. All right. So that's NVIDIA. What do we got? Let's move a little faster since I think we've been on this for some time now. This is RGLD. This thing is tracking gold. Gold has been on a tear. All right, look at this for many weeks. This thing is about to have a dividends payout. When is this? Friday. Oh, already did it. Nice. And they have earnings on Wednesday the 29th. So earnings coming up. No squeezes. Okay, the 130's got us set up. So my ideal buy zone again from about 197, 193.50 to 197.50. Okay. That's going to be my buy zone. I'm going to want to stop out under, it's going to be about 195. So this one's going to be that nice round psychological number. As you can see, this was previous resistance, previous resistance, previous resistance. And then became support, support, came back up. So that's going to be a good stop loss for me. Under the assumption that if it breaks this level, it's going to start trading in this range, right? Like it was previously. So I don't want that. So what I would do is stop out under 195 and target some new highs. 205, 210, RGLD. Let's check out these contracts. Oh, they only have monthlies. So I would get absolutely these November series. These are a little bit pricey. So I think because of this premium, you'd probably want to go a little bit out the money. Maybe these 220s. But I don't like the spread. Right? $1.40 spread is big. These 230s aren't bad. 30-cent spread. But $30 is super far out of the money for RGLD. Let's see what its ATR is. $5. So not really what I want to do. It's got a decent ATR, but it's not ideal. Even though you have 47 days of time. Yeah, I'm gonna skip RGLD. Viva la Viva. I was looking at Vive earlier before I went live. Look at this. So Vive has its old all-time highs there. All-time highs. It's got weekly squeeze. It's got a daily that fired. So, and then November 26th they have earnings. The chart I was looking at was a 2-hour chart. This is the one I'm really interested in. So these 3 moving averages are basically places I'd consider going long if I really want to get involved. My ideal entry is going to be between the 21 and the 34. And the bottom of my entry zone will typically be the bottom of the pattern, which you see over here. It's about 288. And if I really, really, really want to get involved, I would go as far as buying at the 8 EMA. That's something I do rarely, as I like to be consistent in my trading. That's how I have become a profitable trader. But occasionally, I will reach a little bit and buy off the 8 moving average, the 8 exponential moving average. All right, so let's get this zone drawn up. So this was about 288 to 293. Okay. 288 to 293. That's the ideal buy zone. In terms of targets, those are our targets. First target's going to be this old resistance, right? About $300, 302. After 302 comes 304. 3 ATRs coming in at 305. Second Fibonacci target's coming at 306. So basically every dollar, right? 304, 305, 306, 309, 314 up here, around 5 ATR. And Vive, It's a 2 hour chart. They don't really have good contracts. So you could get the October 17th series, similar to the other chart on the 130, and just grab like these 310s or these 300s. So this one's a 60-cent spread, and this is a 55-cent spread. I don't mind trading these spreads that are this spread apart on a $300 stock, right? I'd be much more likely to do that than on a stock that's like $50 and has a 60-cent spread, like whatever company we were looking at before. Again, only 12 days time. Although the move can happen, I suggest going out further. These Novembers are going to be a lot more pricey, but they're going to let you sleep at night. You won't be wondering if the move is coming. So I would suggest going out and getting these November, maybe 310s. But if this is too pricey, the premium, they are pretty pricey, then I would suggest maybe doing a spread, a debit spread or put credit spread. If you're using Thinkorswim like I am, toss, you could just double click or right click. You can hit buy and come up to vertical. And then it will give you a spread idea. And so spreads, they cap your upside potential, but they allow it to be affordable entry. So you see the price to get involved here now is only $4.20 as opposed to $12 or $8, right? So it's cheaper, but essentially you're risking one to make one. You're risking 40% to make 60%, right? These cost about $4.20, and the max profit on these is going to be $5.80 because the profit potential is the width of the strikes minus the debit paid. So this width is 10 wide, right? From 300 to 310 is $10. $10 in premium is $1,000 in dollars. So this is $420 in premium, which means it costs $420 to buy this position. And the highest that this will turn into, if the price goes your way, is $10, which is the max that it can reach, the difference between the strikes. So the most you can earn subsequently would be $5.80. If you sell these for $10, you paid $4.20 for them. 10 minus $4.20 is $5.80. So it's a cheaper way to get involved in stocks that are more expensive. I'm going to be making a course on trading spreads because I really love trading spreads. So if you understood what I just said, then great. If you didn't, be on the lookout. Sometime before the end of this year, I want to drop a course on trading spreads. It won't be super pricey. I'm thinking like $100, and just teaching about different kinds of spreads: vertical spreads, butterfly spreads, selling spreads for a premium. So instead of paying $4.20 for this, you can get paid to take on the risk. Someone will pay you money to take on a trade. How cool is that? All right, so that's Vive. So I would consider either the 1121 300 by 310 vertical spread for $4.20, or what I would likely do is get these 1017 either 310s or 320s. Probably the 310s. The 320s are kind of far out of the money. And these are a lot more spreadier. That's Vive. VRT. Oh, that's a nice pattern. Look at that. I had some stuff drawn on this chart back when the all-time high was down here. That's beautiful. I love to see new all-time highs. All right, let's see the monthly. So this thing is just cranking. Let's see the weekly. Same thing. We've got squeezes, so that's nice. And then the daily, no squeezes on the daily. 195, 130, 78. No. So even though that pattern looked good, it's not ready yet for a trade. So I'm going to skip on VRT. WEC. This monthly, it's not too close. This weekly looks good, but prices extended up here, right? I want to catch it down here around 108 or lower. And then daily, all right, prices all the way up here. I want to catch down here. So let's see if any of these higher, lower time frames. 78, no. See, so this is an example. Moving averages are stacked positively. Price is actually on the buy zone, but I don't have any red dots. I don't have any squeezes. So this does not qualify as a trade that I would like to get involved in. All right. TJ Maxx. I think this thing is going to have a good run. I've been involved in this several times, right? Let's clear this stuff. Go back. There we go. So the monthly looks good. It's got some space, some room to the 3 ATR level. Same thing with the weekly. And the daily, look at that. This is beautiful. When is their earnings? November 19th. So we have this beautiful structure, right? I'm going to do it again, guys. Price goes up. This may not even be considered a bull flag. This may be considered like a wedge or something. I don't know. I call them all bull flags. So that's a bull flag in my book. What I love, again, price is right above 21 EMA. We've got our dots, our squeezes, and all-time highs is just right there, just above the current level of the markets. So I love that. I love it. I love it. I love it. Let's see what the fibs show. All right. So all-time highs, previous all-time highs around 145. First fib target 148. Second one at 152. 5 ATR coming in at 149.89. 3 ATR at 146.30. Because 150 is a psychological number, right? It's a round number, 150. This is what I would be targeting. So let's see what these options look like on TJ Maxx. It's a daily chart, so I want to get time on this. Actually, they have earnings. Was it November 21st? Or like November 17th or something? November 19th. So these November 21st contracts are perfect. And the spreads on these are beautiful, right? There's a $141 stock. And look, 15-cent spread, 10-cent spread, 10-cent spread, 8-cent spread. So this is beautiful. This is beautiful. This is like the perfect, picture perfect setup for me. So price here between 140 and 139 is ideal. I'd stop out right underneath 139, basically underneath this this pattern here, right? Because like I mentioned before, once that support is broken, it's going to start trading down here in between this range. And I don't want to be involved in that. So this is going to give me really good risk to reward ratio. Let's just say I got in at the 21, stopping out at 139. Again, my stop is going to be a close underneath 139, right? Not 139 on the dot. I wait for the candle to close on whatever time frame I'm looking at. Go into previous all-time highs. Look at that, risking one to make $2.80. Beautiful. And to go where I really want to go, which would be 150, it's a 1 to 5 risk reward ratio. All right. I'm going out to November 21st, which is 47 days. And TJ Maxx has an ATR of $1.82. So $1.82 in all I need is a $9 move. So $9 move, 47 days. It can do the same $9 move like 4 or 5 times over. And I'd probably get these 145 contracts here for $3. That's beautiful. I like these. I'm gonna put these on my watch list. Got some nice contracts here. Most of the contracts I'm looking at are about $5 or less, right? This Google one's a little bit more expensive, but waiting on that pullback, it'd probably land under $5. Um, let's write this. Let's write this on the chart for you guys. Guys, if you like the content, like, subscribe, hit the little bell so you can get the videos as I drop them. I don't drop videos too often, but typically once a week you're gonna get something. My weekly watch list, or I might drop a video every once in a while of a setup if I really like something. So we got the 145 calls at, what was that, $3? Yeah, basically. I mean, honestly, I'd pay the 315 if these opened up on Monday right here. I'd pay the 315. So I'm just gonna say at 320 or less. This 1 to 5 risk reward ratio. If you target that 150 and 1 to 250, if you're targeting just the previous highs, price came right back up to the zone and then got rejected. It's and that's beautiful. I love this chart. I love this setup. I definitely want to get involved in TJ Maxx. Okay, VST, monthly, weekly. Let me remove this. They have earnings November 5th. They have a weekly squeeze starting to form. Like last week was a good time to get involved. As price dipped down to the 21. And then the daily. See, what I like about this daily is that the price is right at my buy zone. You can't make this up, man. This is just perfect. Right? And then I'd stop out. What's that, 200? Yeah, that's perfect. I was looking at this group of buyers or sellers right there, which they're positioned at 199. So under 199, that volume shelf breaks, which is why these guys got bought up, right? They came down to 198 and then that was a big move. I'd use 200 as my stop here. Let's just put this in here. 200. Okay. Nice round psychological number. Look at that. Price got rejected from our 702 to 1114 Fibonacci level. So that's why I use these levels. These levels, they just are so consistent. If I extend these lines to the left, look at that. You can see this is major resistance point. Oh, even back here. So resistance, resistance, resistance. Price can't seem to stay above this 211 area. All right, so I'm willing to bet once we get over it and hold it, this thing's really going to take off. Probably run up towards 230, 240. They got earnings November 5th, VST. November 5th, so these November 7th. These things are quite pricey. So 219 is the old all-time high. I would like maybe 220 by 225 vertical spread. Let's see. Or 215 by 220. Top of the spread would be the old all-time highs, essentially. And look at that. For $2, you can get involved. So risking $2 to make